So you're thinking about buying a house, but you don't know where to start and what is the best loan program to buy for first-time home buyers. Hi, I'm Tristen Campanella and I am your local San Diego realtor. I'm here to give you awesome information to help you make the best decisions for you and your family when it comes to buying, selling, or living here in San Diego. So if you like what you're seeing, give me those thumbs up. It really does help all of our channels grow and we really appreciate it. So let's get into this. You're a first-time home buyer and you want to buy a house, but you don't know which loan to get. You have a lot of choices, and the number one thing I'm going to say is that not all lenders, the person who can get you the loan, are created equal. There are two very distinct differences when it comes to getting a loan from your bank or getting a loan from a mortgage broker. When you go into your bank, and we're just gonna use Chase as our example today. So Chase is your bank and you go into them and you ask them for a loan. Well, you're gonna get whatever products that Chase has. They're not gonna be able to give you a Wells Fargo or shop around to different investors or people who will buy your loan. So they can only offer you pretty much a kind of a standard package. This is fine if you're gonna go FHA, but you probably deserve to shop around just a little bit and be able to find out if you can get a better rate, lower fees, lower funding costs, and things that you don't always think about when you're getting a loan. There's so many little hidden fees and you really need somebody to break it down to you. So that's where a mortgage broker comes in. A mortgage broker is like an insurance broker. They have many choices to be able to shop your loan out to get you the best rate, oftentimes to help you with points and give you discounts. The good news is when you are shopping around for a mortgage, the very first time you have a lender pull your credit, you will have an inquiry on your credit. That does not make your points go down dramatically. But the good news about that is that when you go to a couple of different ones, you don't have multiple inquiries. The credit unions and the credit associations, they realize you're shopping for a mortgage. So they understand that you're shopping around and they're not gonna ding you for that. So within the first 30 days of looking around for the best mortgage broker or the loan prices for you, the best thing to do is to shop around. As always, I'm here to help. I have tons of people I work with and happy to answer questions. Call, email me, or text me anytime. So now let's dive into the basic loans. The basic 3 loans that we have right now are your conventional loan. That's what people think about when it's 40% down or 20% down. You have your FHA loan, which is a government-backed loan, and you have your VA loan, which is for active duty surviving spouses or former duty military. And that is a 0% loan. So I'm gonna briefly cover each of those and give you lots of links so that you can get the right information to help you make the best decision. So number 1, the first loan we're gonna talk about is your FHA loan. Your FHA loan is perfect if you're a first-time home buyer and don't have a lot of money to put down. The average amount you wanna put down on this is 3.5%. The credit is also not needing to be super high. So you can get this loan with as little as 580 credit. Now, will you be dinged a little bit on your percentage that you pay for your mortgage? Yes, you're gonna pay a higher amount for your mortgage because you're getting to use it with lower credit and less money down, so you are a higher risk. But the government, Fannie and Freddie, they are backing you up on that, so that is why they're able to do this. This is a great way for people to get into a home when they're transitioning from renting, especially first-time home buyers. It's just, especially with how expensive homes are here in California, putting less money down can sometimes really save you money. So that's a number 1 thing to look at. What are some of the downsides? So some of the downsides of the FHA loan are you are gonna pay private mortgage insurance. That just helps ensure that in case you default on your loan, there is a small insurance. Expect to pay between $250 and $350 per month, but you can refinance out of that once you hit over 22% equity. And with the way the housing market is going now, you're probably gonna hit it pretty soon. So that's your FHA loan. That's great for first-time home buyers. Then we have our conventional loan. You can put as little as 3% down on this, but the more you put down, the more you're gonna be rewarded with a lower interest rate. This is the perfect loan for people who have excellent credit, low to debt to income ratios. That means you have low debt. Oftentimes I see this, not so much with first-time home buyers, but move-up buyers, or people who have co-signers, and that's also something you can always have as a co-signer to help you qualify for these lower interest rates and maybe get a gift and put some money down. So your conventional loan is, you need to have a credit score of 620. You need to have a consistent job for the last 2 years, so 2 years of pay stubs and 2 years of W-9s. This is not a loan for you if you are a self-employed person. There are loans for that we can talk about. But this is the loan for you that the more money you have to put down, the more you're gonna be rewarded. Finally, our third kind of loan that we're talking about today, actually we're gonna talk about 4. The third kind of loan that we're talking about today is our VA loan. Now this is for our active duty, former duty, and surviving spouses. This is basically the government saying, hey guys, thank you so much for your service. You qualify for a home loan for 0% down, and you get lower interest rates than the rest of people who are trying to get loans. So this is such an amazing way to become a homeowner after serving your country, and you can start to build some equity in this. The credit score for this is usually around 600, but I've seen it go as low as 580. And you do need to have reasonable debt to income, and you do need to have jobs. So you can't be in school. You do need to be having a job or having a job lined up if you are going to be POSing out of the military. Okay, you may be saying, that's great and all, but what if I have no money down? Can I still buy a house? Yes, you can. Now, you're gonna have to follow the rules very carefully and see if you have income eligibility. The problem is if you make too much money, you won't qualify, but if you make too little money, you won't qualify either. The number one way I suggest that you get a house with no money down is called our CALFHA loan. It is very similar to your FHA loan, except that you get a secondary loan at 1%, that's the CALFHA Plus program, that covers your down payment and closing costs, or one or the other. You can only work with certified CALFHA lenders, so that's very important to go to my website and get a list of those, and reach out to make sure that you follow the eligibility requirements correctly. You will need to take a home buyer workshop, which is about 1 day online, I think they're doing it, and be able to qualify for these loans. Have reasonable debt to income, reasonable credit, I think 600, maybe 580 is the lowest. And this is such a great way to get into a home. You can also pay off that second loan if your home appreciates in value. There is no prepayment penalty on this. So what a great way to start building equity into a house, become a homeowner with no money down. Now you probably are asking, well, what about these down payment assistance programs I've heard about? They do exist, but if you can imagine how many people try to qualify for these every year, it's pretty competitive. So you can't make more than 80% of the median income dependent on how many people live in your house. So if you have 2 people, that median income as identified by the county is set. If you have 4 people, it's set. So reach out again and I'll give you that link. There's so many little moving parts here. And then you need to follow their guidelines. They will either give you a grant, usually up to $10,000 for your closing costs. That's the number one thing I see. And however, you can qualify for the down payment assistance. Again, you can only use certain lenders that have been approved by their program and understand the rules to that. And again, I'll be putting some links to that down below. So there are many ways and many options for first-time home buyers to purchase a home. You need to sit down and decide which one is the best for you. And I think, as you can see from watching this video, that having good credit is huge. You can definitely get into a house, and probably something nobody ever tells you is once you buy a house, your credit goes up a ton. So the banks see you as less of a flight risk and they give you higher credit. So that's a great way to build your credit. But if you have credit issues and you need to understand how to get your credit up, talking with a really awesome lender or a realtor that you can make a plan about is really gonna help you to do that. And sometimes it takes a little bit of time to build up your credit. But I've seen it done in as short as 3 months if you follow the plans that we set out for you. So thank you so much for watching. I really appreciate it. Remember, I'm always available if you need any help. And my passion is you. I believe life starts at home.